Good morning, guys. So I'll be delivering the brief this morning. Sorry, what's that? Ben Ants camera feed. Briefing. Okay. Thank you, Ben. Yep. So just coming in the morning, having a look around. What we're seeing immediately coming into the morning is that we got the dollar strengthening on the day, and this has been after a lot of dollar weakness seen earlier on in the week following Trump and his team talking down the dollar. However, this positive sentiment in the US economy following Trump's very fast and proactive approach to implementing his policies has been, as we've all seen, very good for the equity market. And as much as he's talking about the dollar, ultimately this positive sentiment in the US, I feel, is going to be driving up the dollar. But it's at the moment trading higher than it was at the beginning of the week, so it's going to be interesting to see how this continues. As Trump is very vocal and he's been on Twitter a lot, it's likely that we may very well see, or particularly anybody who's trading the dollar, is looking out to see if Trump is going to start to talk down. So I'd be a bit cautious expecting the dollar to start rallying coming into the end of the week without any further commentary from him. So what effect has this had on the markets? Coming in and just having a look at the currency pairs, we have euro dollar, which, as we can see, yesterday's dollar strength just weighing down on it. Coming in the morning, not much has happened. Slightly heavier on the day, but really no significant moves at the moment. Now, as I was saying, to see a further extension in any dollar moves, would need to be waiting to hear something from Trump or his team. But ultimately, right now, I'd still be having the long bias. We've been flirting with the $100 handle for a little while now, and we are just above that right now. It's been pretty resilient, and it seems like a logical place to be waiting ahead of any further commentary. So looking at euro dollar, we're in a bit of a range earlier on in the week, and following that bit of dollar strength yesterday, breaking below it. Technically looking, pivot lies close to the bottom of the range. Be an interesting level to be entering on. Apart from that, looking at R1 mid-range, nothing too interesting. In terms of targets, you've got S1 coming in with a bit of support from the end of last week to the beginning of this week. Over there, looking at cable, which has been outperforming on the back of sterling strength recently. Let's have a look at where we're positioned. Yeah, you can see the dollar strength playing a little bit more in with regards to cable this morning. We're just testing the S1 level and have been testing it for about 3 hours now. So if that does give way, there's definitely room to move a bit lower. S1 looking like an obvious target. However, I would be waiting up and not expecting any big moves very early in the morning. We have a lot of data coming out, and I'll go over that in just a moment. So yeah, careful in the morning, seeing as all of the data is largely in the afternoon session. On top of that, the whole global economy is right now being driven by Trump and the US. So don't be expecting too much. And on top of that, we got Theresa May, who would have been able to have quite a large impact on the pound, also in the United States, having a meeting with Donald Trump, and this is quite interesting. The two may not very well like each other, but they do definitely need each other at the moment. Trump, who is anti-EU and saying that the UK needed to leave and was a big supporter of us leaving, has obviously said he'll be first in line, willing to come to some agreement with the United Kingdom with regards to trade. Theresa May wants her first big win, particularly as the triggering of Article 50 deadline that she's set is coming in at the end of March. And obviously nobody in the EU has been willing to even begin negotiations with her until they trigger Article 50. So this is an interesting point that while she's there and speaking to Trump, she may be able to come home with a win. So there's definitely a need for each other at the moment. So that's going to be interesting to see how we get on, and if we hear any commentary regarding that. So that's your dollar this morning. Looking at equities, needless to say what directional bias I have for the day. which is, as anybody who knows me would know, that's not my, I don't like to admit it, but definitely the long play is an option. We've seen a huge positive sentiment coming into the week. Everyone assumed that the market was quiet, a bit rangy, and this is what we'd be expecting. Trump had promised the world, and after his election we saw a huge positive sentiment in US equities whilst they rallied, and then leading up to his inauguration in his first week in office we've seen a bit of a rangy market. However, now we've finally broken out of that as he's implemented all these policies quite rapidly, faster than anybody I believe was expecting. Looking at the Dakota pipeline particularly, there's promise to build a wall, souring relations with Mexico. We'll go over that as well in just a moment. Some of his tweets, and as Ant would point out, Twitter has never been, or the Twitter sphere, as these millennials are calling it, are becoming ever more important. And yeah, yesterday's tweet by Trump regarding the Mexican border and his meeting with the president, bringing down the peso. Actually, while we're on that point, I'll quickly take you over here so you can see a tweet about Li Chung. Yesterday's tweets by Donald Trump. The second one being more interesting. Of jobs and companies lost, if Mexico is unwilling to pay for the badly needed wall, then it would be better to cancel the upcoming meeting. And you can see here, this is where Trump first tweeted. So this is on a minute chart. So we had 1, 2, 3, 4, about 4 minutes till the market really digested this, and we saw a continuation and a further extension of the weakness in Mexican peso. So watching Twitter, and especially Donald Trump, who says he doesn't like Twitter yet gets up every morning and tweets away, is definitely something worth watching. Also today, given the fact that Theresa May's there, we may see some interesting commentary from Donald Trump, who can't seem to keep anything in his belly. So the equity market still very buoyant. After we broke out of this range quite aggressively, we rallied almost a percentage point higher. Yesterday's trading day, as anybody who's been watching the markets for a while will realize, once you get these really extended moves, there is a period of consolidation which was quite muted, about 0.5%. Finishing the day basically flat. So there was about a 0.5% swing in the day, but this consolidation was ultimately what we saw. In terms of retracement, it's still very buoyant, still looking very promising. Technically looking at where we're positioned, it's obviously going to be interesting to note these handles have been very important to be looking at, whether it was Dow Jones at 20,000 or the S&P stopping dead on 2,300. These are levels which should be looking for, especially people in stage 1 and stage 2 of the program, who I've been working with a lot of the times. They'll be looking for technical levels, and that's something you should be doing, going on a daily chart and scrolling all the way back, but particularly with the equities at all-time highs in the United States. Look at these big round numbers and you can see that they work very effectively. So we're only about 2 ticks off 2,300. There's people scaling out off the trade. So looking at where we're positioned, S1's looking pretty good today. We saw some support there yesterday, landing exactly on the 22. S1 today, targeting pivot and looking for a further extension higher. This may be muted if the dollar continues to strengthen. It'll be interesting to see how the US data comes out in the afternoon and how the market reacts to it, respectively. Dow Jones still consolidating above the 20,000 level. You can see we broke above it. Perfect classic test, testing the highs at the moment, actually. So we can see everyone is still talking about the Dow Jones. So there's no surprises there that it is somewhat outperforming. 20,000 being a logical, technical and psychological handle, which we then reached. And for me to look at it, we hit it, we got a bit of profit taking. There was no real rejection, and even whilst the S&P hit the 2,300 handle, yeah, I'm sharing the right chart. The 2,300 handle, it, however, bounced and traded below it. Dow Jones, what does this show about sentiment? That we hovered around it, quite bullishly tested it, broke a bit higher, and then we've since been trading above it, and we're also testing highs at the moment, particularly given that it's the European session. I wouldn't be expecting too much from this. Definitely waiting for the pullback trade, and then looking to go long for the sentiment. speaking to Vass about this last night. Everyone has their issues or questions regarding equities being this high, and he puts a logical point forward in terms of derivatives and investments. It's interesting to be able to see that you're not going to put your money into bonds at the moment as yields are increasing and prices are dropping. Therefore, equity is still looking like an attractive asset to be holding, particularly with the good US data, Donald Trump trying to talk down the dollar, and this possible further fiscal stimulus package coming out anytime soon. He's been very vocal and very active in what he's doing. Nasdaq following suit, just testing pivot as we speak. European equities starting actually on the back foot a little bit here. How does that relate to our euro? Well, look, we can see that the euro seems to be outperforming this morning anyway, so this will be weighing on the equity spaces. So it's interesting to see that euro dollar is outperforming, which is weighing down on European equities, while cable is definitely underperforming at the moment between those two. Looking at gold, being a safe haven asset, solid trend lower. We flirted with the 1200 handle, ultimately breaking lower. S1 providing great support midweek. Looks like a technical breakout, and this is oftentimes what you'll see with gold. Anybody who's familiar with trading it, it breaks quite aggressively to the downside, and then the retracement often takes a long time. Guys in stage 1 and 2 often ask, how long should we be waiting for a retracement? With the S&P, generally speaking, as a slower and less volatile product, it retraces quite quick, much faster, I feel, than gold, which has a technical breakout and then may take up to, in this case, 1, 2, 3 hours to come back. Pivot looking like a good place to go short. Targeting S1, obviously, if this trend is to continue throughout the day, it's fair to assume that we would break for new lows. Therefore, S1 looking quite attractive on the downside. So that's gold. We can't leave fixed income alone. Let's talk about T-notes. So that's any sort of analysis, looking onto a daily, just seeing where we're positioned. Yeah, so T-notes, as you can see, prices falling, yields increasing. Really, so a long way to go over here till we start breaking for new lows and everyone starts talking about increasing yields once again, which would then further push the drive lower. Flicking on to 60 minutes for the day. Pivots on. Yeah, look, so T-notes following gold, trending lower. So at the moment, equities are at their highs, or US equities at their highs, safe havens at the lows. It's sort of indicating a risk-on day, but look, I'd be a bit cautious taking any sizable positions, given the fact that we have data coming out in the US for the afternoon. We'll go over that calendar in just a minute. It's also worth noting that Trump and Putin are having a meeting on the weekend. This couple is going to be interesting to watch going forward. Trump's been looking to get cozy with Putin for a while now, rightfully or wrongfully. Trump is not there to do politically correct things, so to say. He just wants to extend a friendship hand to Putin, so it's going to be interesting to see how that relationship develops. Looking out for tweets over the weekends which will affect the markets coming into Monday morning. Just having a look at our... This is also interesting. As we know, Theresa May is in United States, and over here in foreign policy speech to the congressional Republicans in Philadelphia, she decided to... She said that the decline of the West is not inevitable, but the US and UK had to lead together again. So this means her and Trump, if she's going to be following this mantra, it's once again going to indicate that her and Trump very much need each other. It's going to be interesting to see how this trip materializes and what sort of agreements they do come to. This is the Putin, as we were discussing. Okay, looking at the data calendar ahead, quiet European session. In the afternoon we have GDP at 1:30. Expectation of 2.2%, previously 3.5%. So especially people are starting off, what does this mean? Well, frankly, if you don't have relativity, you don't have any relative figures, it doesn't make sense. So always make sure you're going on to your trading economics, looking for the price point that's coming out. So United States GDP growth factor. So the previous reading, very high, 3.5%, was quite interesting. This was faster than anticipated export, boosted by a boom in soybean shipments. There you go. Soybeans playing an ever-growing part of Western life. So what we're expecting a number around 2.2%. Looking at where that'll place us, that's a healthy number. Looking at from January till late to end 2016, I'd say the 2.2 is about the average when you take all of this into consideration. On the downside, a bearish reading I'd say would be more along the lines of sub 2, approaching 1.4 would be significantly more bearish. And durable goods orders, month on month, expect at 2.6 as opposed to 4.5 previously. As you can see, that this is has vanished from my charts. It's quite a volatile data set. It swings quite heavily, so even though initial reactions can be 2.6% compared to minus 4.5%, you know, this is extremely positive, so on and so forth. However, the data set is very volatile, and you can see if we get the expected reading of 2.6%, it'll be a reasonable reading, nothing exceptional. Really looking for a move higher than 4.8, or on the downside, if we get a negative reading, particularly if we start getting around minus 3, with a positive expectation, that will weigh quite heavily on the dollar. So like I said, expect the continuation of today's trend. There's no reason to fight it. Be careful and cautious. Be greedy with your entries during the European session. It's likely to be a quiet one, just given the fact that we've had quite violent moves already throughout the week. And a lot of the data sets are coming out in the afternoon, and they are relatively important and have the propensity to move the markets quite a bit. Also, you got the US Michigan sentiment, which can be very important. Sentiment readings in the United States, which have been all-time high, as well as in Europe. It's going to be interesting to see how this moves forward. Maybe not this one particularly, but particularly the next set of data, which will come out of Michigan sentiment, given that Donald Trump has now had his first week in the office. Okay, guys. That just about covers everything. I'll be in Trading Live. If you have any questions regarding it, please do let me know. Best of luck. Thank you very much.